and welcome back. If you are new to the channel, please do me a favor, like the video, subscribe the channel. It makes me be able to bring more interesting statistics and facts and create videos. So today we're going to discuss about taxes and specifically taxes in Europe, which is probably one of the region where the taxation is heavy and really crushes people, especially the young people. And as the saying goes, you can't escape death and taxes. Um, Today we're going to see why the taxes are a burden and how it affects regular people. So, as I was saying, Europe has a high tax environment with the average tax to GDP ratio of roughly 40% across the EU. The region relies heavily on labor taxes, social contributions, which account about 51% of total taxes revenue, while consumption taxes like VAT, value added tax, makes up the rest. And of course, tax systems, rates, and burdens vary significantly across the continent and the different EU countries. So, if we are talking about high tax countries, the burden is high in countries like Denmark with 45%, France 43%, Austria 43%. So, these are the, let's say, leaders. But Belgium and Germany hold the highest labor tax, so specifically to labor, with wages exceeding 46%. Now, if we are talking about the lower tax countries, we have Ireland with about 22%, Romania close to 28%, Malta a bit over 28%, and of course Cyprus, which has the lowest labor tax burden at only 26.4%. If we go into personal income taxes, then we see Denmark, which has a top personal income rate taxation of 60.5%. So more than half of your earnings go to tax. And then Austria's highest bracket sits at 55%. And there are also some countries, less and less, which have flat tax, unique taxation rate, including Bulgaria and Romania with 10% and Hungary with 15%. So, a very interesting article from Euronews, the European news portal, lets us know why Europeans pay the most income tax and where do children make the biggest difference. Because that's a thing in Europe, so you get all kind of tax exemption for different reasons, and of course, children being a big part of it. So they want to encourage natality, which, as we've seen in a previous video, it's definitely going down. So as they put it here, and as I've explained, the Europe's personal income taxes rates differ significantly with dependent children, lower tax burdens in different countries. Um, and if we go, for example, in the case of a single person without children, so the majority of young people, maybe before they get married, before they start a family and have children, this would be a first scenario, right? So earning 100% of the average wage in 2025 for this option, personal income tax or PIT varies from 6.6% in Poland to 35.3% in Denmark across the 27 European countries, 22 of which being EU members. So, well, in Poland, it's not really that much. In Denmark, 35 over 35%. So, you better get married and have children. So, the EU 22 average stands at 17.2, while the OECD average is slightly lower at 15.5%. But there are also some good news, with Denmark being the only country exceeding 30%, while some other high taxation countries for single persons, Iceland, Belgium, above 25%, and you can see here as the rates go lower. So in addition to Poland, the Czech Republic or Czechia is the only one in the single digits with close to 10%, and Switzerland and Slovakia also remain below 12%. Now, if we are looking at the one earner couple with two children, in most cases they pay less tax than a single person without children. So you can see the comparison, 17.2 versus 11%, 15.5 versus 11%. And in this scenario, the tax rates vary from 6.5% in Slovakia to 31.8% in Denmark. So it doesn't really get a lot lower in Denmark. They still want to tax you high. You just get maybe a 4% discount. The negative tax in Slovakia means that taxes are refunded rather than deducted. So it's an interesting example, but it's also uh, pretty much very rare. And Germany comes close to that threshold, imposing just a 0.7% rate. So again, a huge incentive to have children. Then you can see some rates in other countries, with Poland again being great, so 1.1%, Czech Republic 3.3%, and then Portugal and Slovenia, where some other countries still have over 20%, Estonia, Finland, Iceland, and Norway. You can also find here at the top, Denmark, yeah, it's the proud taxes champion. And then you have the EU average, and then you have the countries that are, let's say, taking less tax, with Poland, Czechia, Slovakia being the top three. So the eastern part of Europe is generally taking less in taxes. Now you can argue, what are you receiving in terms of yeah, benefit after paying taxes. So there is this social contract acceptance, let's say, because Europeans cope with high taxes throughout a combination of cultural acceptance, systemic reliance, targeted political or economic pushback. And while the tax burden is heavy, the relationships between European citizens and their tax systems is distinct from that of other regions like North America, US in particular. So this social contract exception means that most Europeans tolerate high taxes because they operate under the so-called social contract. And in exchange for these high income taxes, the citizens should receive very good public benefits. So public services like free or highly subsidized healthcare, then university education, a very good public transit system, paid parental leave, and according to different surveys, many citizens explicitly support paying taxes if they directly fund these pillars. Of course, this is not always the case. Sometimes they fund, let's say, military or all kind of expenses that people don't really, let's say, are fans of. But at least indeed in Europe, the social contract still goes strong, let's say, compared to other regions. Social safety nets, not so much lately, but we can say, yeah, there are some unemployment benefits, probably better than in US, some state pension programs, um, and the like. Now, the cost of living crisis, because yeah, obviously taxes and the cost of living go hand in hand, meaning as much as more as you pay in taxes, the less it stays within your wallet for the day-to-day expenditures. So, despite the general acceptance of taxes, the tolerance threshold has been severely tested by inflation lately and the economic stagnation which followed. So, recent surveys say that over 93% of Europeans report anxiety over the cost of living crisis and altering how they cope in practice. So you probably heard about the tax the rich demand coming generally from the left part of the social spectrum, with everyday consumers now increasingly being resentful that labor and consumption taxes supply roughly 80% of EU revenues, while the wealth taxes contribute minimally. Um, and then, yeah, all kind of protests and active resistance. So we had agrarian protests, especially in countries like France, Germany, and Spain, where the agricultural sector is still strong, and different strikes against austerity measures when different politicians try to raise taxes and say that this is done in the name of austerity and lowering the GDP deficit and the commercial balance. It's basically affecting people. So you have labor union strikes and such. So let me know in the comments how the taxes are in your country and how you are affected by taxes, and also if you know any legal tips and tricks for lowering the taxes. And again, if you are new to the channel, please do me a favor, subscribe to the channel and like the video as it helps me grow faster. Thank you.